Hello everybody, it's Tortoise Investing coming at you today with 3 of the best stocks to buy now. We got 2 dividend payers and a growth stock for yins. If you're new, please hit that subscribe button for me and drop a like down below. Helps the channel and the videos out a ton. And I put together best stock to buy nows at least once a week, sometimes twice. I know yins love them, and I love to do research and put them together. Now, none of this is financial advice. I'm not saying go out there and buy these. You're going to get guaranteed returns. Just something to take a look at and then see if they fit in your own portfolio. And before we do dive into the stocks and looking at them through Qualtrim Insights, this is my portfolio currently. Just cracked $1,000 mark yet again. We have 5 total holdings. Yep, might have jumped into Celsius a little bit early, but it hit my price target. I bought some. It dropped. I bought more. It dropped again. I bought more. And I'm just going to keep buying more. My price target was 65. This thing at one point was like close to 100. And I was like, man, if it comes back down, because like I drink them like every day. Love Celsius. It's one of the best energy drinks out there, my personal opinion. But yeah, my intentions going forward, I'm sitting on the cash that I have on hand. MasterCard has earnings coming up, and Chipotle later on this month. And any significant pullbacks on those, and I will be deploying all the cash that they have on hand. And whenever I get paid again, Celsius is down still, I'll just buy more. But yeah, this portfolio and how everything is looking, I think it's a pretty good setup. I think they're winners. I think I have a portfolio full of winners. Now, without further ado, the stonks we're looking for. We're going to be taking a look at MSCI, Visa, and Celsius. MSCI adjusted free cash flow yield of 2.78%, dividend yield of 1.28%, and a payout ratio just over 39%. All those things look pretty good. Quarter over quarter, you can see our revenue is trending very nicely, as well as the free cash flow and EPS growing in the right direction. Take a look here. This thing hit a peak. I think it hit over 600 at one point. Yep, 604 February 1st. We are down almost 18% since then. So a nice little pullback for what I feel is a pretty strong compounder. Now, year to date, it's down 10.7. Over the last year, down 3. Over the last 5 years, up 106.11%. Absolutely some great compounding going on right there. I love this stock for the long term. Revenue's grown at a rate of 9.34% over the last 10 years. And the retention rate, the reason that they had a little bit of a pullback last time is this went down just a fuzz from 93.6 to 92.8. So hopefully they can get that retention rate back up and get things trucking in the right direction. EBITDA is growing like crazy. Free cash flow, 15.25%, very nice. EPS, 22.84% over the last 10 years. Again, very nice growth. Take a look here at the quarterly, so you can see the updated debt, $4.51 billion. EBITDA is $1.71 billion. My general rule of thumb is, sound like companies have more than 3 times their EBITDA in debt. If something was to happen, something major was to happen, they were needing to take out debt, it's not going to hit them as hard as someone that's already got a ton of debt on their balance sheet and their financial sheet doesn't look as well. Now, the dividends, another one place where this thing shines. Over the last 10 years, grown a rate of 24.42%. Look at those big O steps. There's some years where they increase it twice, which is just awesome. Here lately, it looks like the latest one was 16%. I'm not going to complain about that. That is some great compounding still. Now, the return on capital employed, 34.6% last year. That's just awesome. Market averages is like 9 to 10%. So you can cut this thing in half. We are still looking good. Now, quarter over quarter, so you can see that share count declining over the last 10 years, decreasing at a rate right at 4%. Looks like they have slowed down their share repurchases, but still over 1% a year on average. I like it. 79.51 shares currently, and they started the year 79.81. So hopefully, if they see this dip as an opportunity to add to their share count. Now, EPS growth, average 1469 growing to 1557. So I think that is right at double digits. And the revenue, 2.82 billion growing to 3.08 billion. So again, I think that is right at double digits as well for the revenue growth. Next up, Visa, an absolute beast. I own MasterCard personally, but I wouldn't mind owning both of these. And if Visa continues to drop, it's going to be one I'm off to seriously consider. Now, this hit a peak of 290 back on March 21st. We are down 8.5% on Visa. Now, Visa year to date is up 2.5% over last year, up 10.96%. 5 years up 47%. That's kind of plateaued here. It's had a little bit of ups and downs during this interest rate, like little area of things just going up and up and up. It's kind of like leveled out, but it'll level out and then it'll run, level out and then it'll run. So I feel fantastic and more than confident in Visa's future going forward. Now, revenue growing at a rate of 10.74%. That is awesome. The amount of total Visa cards out there is growing year over year, and that's how they make their money. They collect fees. They got, 4.4 billion cards between debit and credit out in circulation. That is just crazy. Now, EBITDA, not EBITDA, free cash flow. When we look at that free cash flow, growing at a rate of 22.68%. That is awesome. And if you take a look here over the last 10 years with free cash flow adjusted, 25.7. So that means they're buying back those shares. Love it. Love it. EPS growth 15.68% over the last 10 years. The dividend growing at a rate of 17.92%. So that is some beautiful compounding as well. Very similar to MSCI in that sense. Not as quick over the last 10 years, but very consistent. Return on capital employed, 31.16% as of last year. That is very solid, and that is great. Even there in 2020 when the world shut down, still pumped out over 21%. Now let's take a look at the debt. Debt is $20.6 billion. They have $20.29 billion in cash. That ain't a worry at all. They're good to go. Shares outstanding been decreasing at a rate of 2% over the last 10 years. It is increasing at a rate of 2.5% over last year. So that is very nice. I love to see this downtrend. And that's the thing that Visa does and MasterCard does so well, is that they return capital to the shareholders in the form of buybacks and big double-digit dividend hikes. Love to see it. Now, EPS growing from $9.95 to $11.12. That is some double-digit growth right there. And revenue, $35.92 billion, growing to $39.66 billion. So again, double-digit growth from the revenue. Really like Visa. I personally have my eyes on this. This thing dips below, like, if this has another pullback or two, I'm just going to start me a position. I'm on MasterCard and Visa. Fine by me. Now, next up, my biggest loser in my portfolio, but I'm just going to continue adding because I believe very, very, very long-term in the future of Celsius. This thing has fallen from grace this year. At one point, this thing was over $96. It is down 48.4%. It's still a baby company. 11.56 billion market cap. It's still something that's going to be growing for a while. I think Monster's over 40 billion with their market cap. So just free cash flow yield, 2.17% over the last year to date, down 16. 1 year up 3.75, and over the last 5 years, woo, up 2,900%. That is awesome. Now, the revenue is growing rapidly. This is a growth company. From my analysis that I have done, their revenue growth is going to be around 19 to 20% over the next 5 years. That is still really, really strong. The free cash flow, again, is growing in the positive right direction. It'd probably be better to look at this on a quarterly basis, so we'll do that. As you see, free cash flow looking good. We're now in the positive. EPS growing in the right direction. Cash on hand is growing. Return on capital employed is growing. Hopefully they can start doing some share buybacks as well. That would make me very, very happy. As you see, they have been diluting over the past couple years. But since 2021, we are still sitting right about where we was. So again, hopefully, if they have any excess cash on hand, they can start buying back some of those shares. I would absolutely love that. And that would just make this company just take off even more than what I think it's already going to. Again, this is something that I'm invested into. I'm not saying buy into it because I'm just a very big believer in them long term. Now, EPS growing from $1.05 to $1.42. I don't exactly know what that is, so I'm going to do the math on it real quick. That is a growth in EPS of over 25% still, so that's pretty good. Revenue is $1.68 billion, growing to $2.15 billion. So that is 22% growth from the revenue. So I love Celsius. I drink them every day. I'm a big believer in them long term. So I do see this. I mean, if it keeps dropping, I'm just going to buy more. 'Cause I don't think they're going anywhere. They've got a foothold on the energy drink sector. They're one of the players. I know there's plenty of them out there. It's a very competitive sector, but I think that they are going to do just fine. Celsius, Visa, MSCI, that's what I got for you today. Hit that like and subscribe button for more, and until next time, hope everyone takes care. See yous.